Eric Muathe for the weekend of September 27th and September 28th, 2014. Let's take a look at Friday's close. The Dow was up almost 1%, so was the NASDAQ, so was the S&P 500 on what was a nice rebound day. Crude oil was up 1% and the VIX was down 5%. And for the week, we see that the S&P 500 was down 1.37%. For the week, the NASDAQ was down 1.5%. And for the week, we see that the Dow was down slightly, just under 1%. So let's take a look at the annotated charts. We can see that on the weekly charts, the NASDAQ did finally manage to hold above the previous weekly closing high of 4485.93. So as of the close, that was actually a good close. It's holding above the 10-week moving average and holding the previous buy point, so that breakout continues being in play. The only problem is on the technicals, we can see that we still have the RSI showing us negative divergence, which is not a good thing long term. And also we still continue seeing that resistance coming on this line here, which means that this seems like a double top on the weekly chart. So if we take a look at the MACDs, both MACDs continue trading above 0, which is bullish as of right now. Now if you take a look at the NASDAQ daily, you see that we are holding above the 50-day moving average, which is very good. We are also holding above the previous buy point on the daily chart, which is very good. Take a look at the daily RSI support line held, which is also very good. And also the line that has been holding the NASDAQ together on the RSI is holding the market as of Friday's close. So it's only until we break below that line that we can really get very bull or very bearish. Right now the market is holding support where it needs to. This line continues holding, and actually if you can see, so there was a support there and support there. And since that's the case, we have to assume that the market wants to bounce. On the NASDAQ hourly chart, we see that one of the reasons why the market did come off the lows after Thursday's big down day, so the snapback on Friday, comes from the fact that on the hourly there was this line here on the RSI, so that held, and also coming off this line which was the initial move here. So this line, once those two lines held, the market did come back. Now we see that there's signs that maybe somewhere around here we could have some stalling, and I'll show you that on the 30-minute chart for the NASDAQ. So let's get that. And you can see that this is now the NASDAQ 30-minute. You can see the intraday high there, which failed again there. So that took about 2 weeks, and so once it came back here, it failed, and I think that kind of spooked traders, and that's why we've been down since. But take a look at the fact that this broke down here off the highs, which is this high here, and so we draw a straight line, and you can see that we've stalled once before, which was the high, I believe was on Wednesday. And so we come back on Friday, we touch that high there and seem to be pulling back. So maybe this is a reason, if you are short, to have some hope that the market is seeing short-term resistance. But those dailies don't look that bad as of right now, unless the market can move below 50 on the NASDAQ and other major markets. So if we take a look at the Dow weekly, okay, so we held above the previous weekly closing high of 17,100. So that is holding by about 3 points or so. That's okay. Problem is we are looking at the weekly RSI and it continues showing us resistance. So if this is the case, you should expect the market to continue going higher unless the market can break out above the declining RSI line on the weekly. Take a look at the Dow daily. we can see we bounced back above the 50-day moving average A here on the price, and also above the 50 level on the daily RSI. That's why we had a nice up day, just like we had a big down day on Thursday because the market moved below 50 on the daily RSI, back above 50 on Friday for a big gain. And so, you know, it's confusing, yes, but holding above 50 is a good thing for those of you who are long. Unless the market is breaking below 50 and breaking below 200, you can't really say that the market is not healthy. The market is healthy. Yes, it came off the highs because of this declining RSI line, but maybe it was just for a small pullback. We'll see what happens. Take a look at the Dow hourly, and we had seen this setup coming into Friday's session, and we thought that this could lead to a bounce. That seems to be true. Also, the same line, this line here, has been support level for the Dow. Every time we bounce off the line, the market has a nice move every single time. And so we were suspecting as of late Thursday that if this line also held, we could have a move, and we got that move on Friday. Take a look at the 30-minute chart for the Dow. And you can see now we are facing with short-term potential resistance on this declining price channel on the 30-minute chart for the Dow. We have to be above that line if we are going to continue moving higher. So that could be resistance. So they start two types of resistance. One coming from this top on the 30-minute chart, and also the previous resistance level here. So that all this is coinciding right there at the highs for Friday's session. And this had been resistance on multiple occasions on the way up, or during the attempts to go up. This was resistance on multiple occasions. We finally, after some resistance, managed to move above that line. Now we've broken below it, tried to recapture it, failed. And so now we are back in this general area. For the market to move higher, it does need to be above those two lines. We can also see that on the 30-minute chart, the reason why we had a move on Friday is because this line held, and it's been holding ever since we moved above that line, which was here. This has turned into support. How this works, I don't know, but it does. We've been bouncing off this line every single time, and as of late Thursday, once we saw that setup, we suspected the market could also bounce, and it's exactly what happened. Now if we take a look at the Dow Transports weekly, just want to show you that the Dow Transports did manage to close above the previous weekly closing high of 84.28. So the breakout here continues being healthy because the market did not close below that level. Also, we need to watch this line here, because as long as the market is holding above the previous and what has been support line on the weekly RSI, you should expect the market to be very healthy. Still trading above the 10-week moving average. That's a good market. Take a look at the S&P 500 weekly, and the S&P 500 did manage to close below the previous weekly closing high by about 3 points or so. It's not the worst. It's still around that level. So I would say because it's trading near the 10-week moving average, it's not as broken, given the fact that the Dow and the NASDAQ held. So I'll give it the benefit of the doubt. Now remember, this pullback comes from the fact and observation that we made lower lows in the weekly RSI while the market was making higher highs. So that could be a problem. We need to be above this declining RSI line if the market is to do well. And also, if we ever break this RSI support line on the way down, that's going to be a bad signal. For now, the market looks healthy based on the weekly chart for the S&P 500. Take a look at the S&P 500 daily, and you can see holding above the 50-day, which is good. And also you can see that it's bouncing on this line. Has been on my chart for a long time. This simple line here is where the market has been bouncing. As you can see previously, every time we moved above the line, the market bounced. Every time we held that line, the market bounced. Every single time, as you can see here. So this has been a very nice place to use for reasons why you need to be long, and also here, which was the low. So we see again here it's holding above that line. So who's to say the market can continue moving higher? Now, if you take a look at the Canadian market, which was down another 1.57%, it had been down the previous week also, and so down again 2 weeks back to back. And so one might consider what that means. Hard to tell. It seems to be holding above the 34-week moving average, which is okay. All right, so it's down, but is it broken? We shall see. Number one, I can tell that it's not necessarily broken because of this move here. So the breakout came somewhere here on the way up. It's 2013 entry, which was this move above that line, which was somewhere here at about what, 12,300. And so I draw a straight line from that, and you can see it's back testing the previous entry level. If it holds and bounces off this line on a weekly time frame, then this is a nice time to go long. And that's what it looks like. It's back to the line. I would say it's not necessarily broken. In fact, if you take a look at the daily, and this is 1 year chart, so if you take a look at the daily and go back 2 years on the Canadian market, you'll see that it's been bouncing ever since these lows here, which there was an entry point there, which was an ideal entry point. Just draw a straight line around 30.9, and you can see that every time we hold that line with uniform activity, we make a short-term high. Double bottom there, short-term low, short-term low. And so we are here, we are back above the line. If we continue holding above the line, it is very conceivable that the market does move higher. So this is where it's been finding support, and it looks like to me it's not necessarily broken. It's a pullback, but not broken. As you can see, this is where you had to go long over the last 2 years, and anything above that is a bounce territory. The one thing I have to say is on the monthly, the reason why it's down significantly more than most markets is because it's moving below 69.10. That would be my thinking. Take a look at the hourly, and the hourly does show some sign of pullback territory, just like the US markets. If you draw a line like that, simple line, as you can see, we broke below that line there. So let me draw that again. So we broke below that line there, and unless we can move above that blue line, we might find some short-term resistance. If we take the highs, you can see that this is also make or break. Above the two lines, that's bullish. And if we can't hold above the blue lines, then we go lower. So market is going to have to decide whether it's going to stall at the top lines of the hourly RSI, and if it's going to stall or break out above the backtest line. And we'll see by early Monday, Tuesday, whether it's going to be resistance or it's going to break out for a nice additional surge in the market. Let's take a look at Apple here. And as you can see, there's a new buy point, which is at 102.50. So 102.50. It needs to be above that. If it can break out above that, it's going to be a fresh weekly breakout. So just keep note of that. That's a level I would consider a fresh breakout above 102.50, the most recent weekly closing high. If you take a look at the chart, this looks okay because it's trading above the 10-week moving average at the end of this week after what looked like it was going to close below that. So it held finally above the 10-week moving average, which is healthy. If you take a look at the daily for Apple, you see that it makes sense that it bounced on Friday for two reasons. Number one, it held the price at the 50-day moving average. Also the RSI held, which is the second reason. This line held, which has been the ideal entry level on the way up, which was just during this gap up, and it's been support ever since then. So this line that has been support is where it was trading as of Friday or Thursday's sell-off. That held, and also the lows line on the daily RSI held as of late Thursday. That's why it was up, in my opinion. Continues being healthy, mainly because if you take a look at the monthly continues trading above 69.10. And just like it did when it was bullish here 2011, 2012, during this nice run, as long as it's holding above 69.10, it should continue trading well. Now I want to show you one chart that in my opinion is the biggest and the loudest buy signal in the market, and it is the VIX. The VIX is giving us a buy signal for the general market. Why? Because this is where it's been stalling. Every time the VIX has come here and stalled, it made a high, the market was a buy. Double top there, buy the general market. You fail to hold above the line there, you buy the general market here. Buy the market during this resistance, which is here. You come here in August, you stalled here, you buy the general market. And take a look at what's taken place here the last 3-4 days. You have a double top on the line, which means it's double important. My thinking is, unless the VIX can trade above the line, which is in this territory, this here is telling me that the general market is a buy, and therefore the market should be bought based on this chart itself, unless the VIX can break out above that line. Looks like the VIX is saying, like it has been doing over the last couple of years, that every time it stalls at that level, you want to buy the general market. Now I want to end the video by taking a look at the monthly chart for the S&P 500, which is holding above 69.10. Take a look at the Dow, which is holding above 69.10, and so is the NASDAQ. So let me show you the NASDAQ. Take a look at the NASDAQ monthly, which is also holding above 69.10. As long as markets are holding above 69.10, the markets are going to continue being strong, and every pullback is going to be shallow.